Incap published its Q2 report today morning, and we have the company CEO Otto Pukk here at interview. Welcome, Otto.
Thank you for having me, Antti.
And congratulations. I guess that I don't have to ask if you're happy or not.
No, of course we are happy, and with the result, the numbers speaks very much for themselves, and fantastic team effort again that have pulled this together with the difficult market situations that there is still in the background.
Let's start with growth. How much of this 80% growth came from volume, and how much was like pricing-driven growth?
I think most is volume driven of the growth. There was some impact, and I know Antti went through the numbers properly in our webinar that I hope everybody is looking at the replay of that as well. But most is driven still by volume growth. But there's some small element when it comes to exchange rate gains, and there's a small element also when it comes to this PPVs that we call it, that the price have increased for the raw material.
You disclosed also your customer structure in the report for the first half, and it didn't change too much compared to a year. But could you please discuss a bit about the biggest customer? What was its role in growth, and was it as dominating as it was in last year?
No, it has continued to grow, and we're very happy that we have the opportunity to grow together with them. We see growth in all of our units currently, and I think that even if you think the number is small in the difference on the customer side, then still we reported that we have gone from 10 to now 12 accounts over 1 million, and that is a consistent work we are doing to widening our customer portfolio and bringing and nurturing up other big accounts.
Profitability was strong as usual for Incap in the second quarter. Could you please discuss a bit about margin drivers like pricing, inflation, product mix? What kind of impact these things had on the margin in the quarter two?
As I mentioned before, is that we pass through very much of the different kind of price increases towards our end customers. That we provide a manufacturing service, and of course, if the input in that service have gone up, then we pass that through. There can be some, how to say, periodization issues in that of course, if the I don't know, utility price increase 1 month, we might not be able to immediately pass that on to a customer. But in general, we are not absorbing these increases in Incap. These are passed on, and in the end, it's the end customer that pays for this.
And product mix, was it like better or normal or worse than usual?
I don't think there is such thing as a better or worse. Of course, looking at Q1, the profitability was somewhat lower, still very good for the EMS company. Now we had more higher profitability, more back to I would say more normal figures. Even if the profitability also was impacted by some of the some items in that sense. So no, I'm happy with the result. Let's put it like that.
Yeah, that's obvious. Global economy is highly uncertain right now. How do you see demand environment for Incap's services, and how far actually you can see?
We see much longer now than some years ago. So we already have visibility in some cases into 2023, 2024. And so that is something we are not that used to in the industry. Normally you have a 3 months visibility, and at least when I started in the business. But now we see already, as I said, into 2024, and we see already orders that far as well. So for us, we believe that our growth story will continue.
Do you see any risk that customers would build up excess inventories right now when sales is increasing so fast?
I think that we have not seen that from Incap side that there is a build-up of inventory. Rather that the customers are urgent to get the shipments because the materials are in general delayed or hard to gain, then the customers are urgent getting the shipment to get those out on their own market. So I'm not that afraid of that they are putting it into the cheek, as they say in Estonia.
Yeah, energy crisis is a hot topic right now in Europe. What kind of opportunities and maybe threats this issue could give for Incap?
No, we see a boom into green energy sector, so solar energy and so on currently, and of course that is all driven and done by electronics. So I think that the energy crisis in Estonia, not in Estonia, in Europe in general, is very much driving the strong demand we see in renewable energy and green energy and everything that has to do with something green.
Incap has guidance for the full year, which the investors obviously appreciate, but you don't have medium or long-term financial targets. Why and what should investors think about your ambitions long-term in terms of sales and profitability?
No, I think when we have said it before that Incap is a growth case. We are continuing to develop it. If you look at the investments we're doing for the coming years, we're expanding and increasing the capabilities and capacities in all of the units, and that we will continue to continue with as well. We are very committed to our operational model. We have a very lean organizational structure, and I've talked about it a lot before. Basically, the decentralized model that we have gives us three big benefits. One, of course, is the customer service. We have dedicated teams in all units that cater to our customers, and that gives a very high service level. By having or letting people in the units take decisions and play part of the business gives us a possibility to maintain very motivated and capable people. So we have fantastic people working in Incap that are motivated and entrepreneurial in that sense, and not having overhead costs and so of course shows on the profitability road or row down in the P&L. And I think that is something we are committed to continue at, even when we grow, that we'll continue with the same setup. So growth and maintaining that profitability level, that perhaps is the message from this.
That's very good a goal. Thank you very much, Otto, and the best luck for the second half.
Thank you very much, Antti.